As we begin June 2025, we have seen the stock market and cryptocurrency recovery after large drops back in April, making investors panic that the stock market would continue to fall during 2025. I believe 2025 will still be a good year, although there will be a lot more volatility this year, mainly due to a new US president causing chaos within the markets. Welcome to my channel, where you can watch my AI stocks, cryptocurrency, wealth building investment strategies, and how I use these to beat inflation. At the end of the video, I'll give my thoughts on how I intend to take advantage of any investment opportunities this month. US debt continues to climb higher. This has been the case under all presidents, continuing to say that they will cut the debt and deficit when in reality they actually do the opposite and continue to build the debt mountain higher. In the past, debt ceilings were raised by $1 trillion. Not anymore. Now you're talking numbers such as $4 trillion. It's hard to imagine a US debt increasing by $4 trillion per year. As US debt continues higher, what does this mean for the purchasing power of the US dollar and US bonds? Even the so-called cutting government spending has not made a difference. It's just a reminder not to listen to politicians who say they are going to cut the deficit or pay down the debt. It's just not going to happen. In the end, higher debt translates to higher inflation, which I suspect will be the case for the rest of this decade into the next, with the next wave of inflation already underway, which is why the bond market has been demanding higher yields and investors have been moving out of the dollar to other currencies, such as the yen and euro. President Trump is still demanding the Fed cut interest rates, when in reality you can't cut rates while the debt is being downgraded. In fact, you need to raise rates. The damage the tariffs and inflation has been done to the confidence in the US debt, which means the Fed may even be forced to raise rates if inflation really takes off. You can see the impact of the Trump inflation uncertainty by looking at the rising 10-year US Treasury yield, with longer 30-year bond yields showing an even bigger jump. Therefore, the curve is discounting what looks like stagflation, the worst type of economy to have, as nations are unable to cut interest rates during recessions. You need to pay attention to the bond market, especially when nations such as the US have a huge amount of debt and operate in a large budget deficit. The US could monetize the debt, but then you get inflation. The bond market has spoken, and they want both the US and China to tone down their trade war, reduce the tariffs, or else pay the price with higher yields. Trump has lost the trade war as soon as he announced his tariffs on April 2nd, which has done huge damage to the US and global economy, which means higher incoming inflation and economic contraction. What can investors do? Myself, I'll be limiting my exposure to the US dollar and bonds. Instead, invest in strong currencies such as the Swiss franc. Gold is another investment which has done well. Also, governments cannot print houses, so they tend to do well. Lastly, I will ensure I have enough cash on my investment accounts to capitalize on any panic events as the economic fundamentals deteriorate. Subscribe to my channel and watch how I navigate my investments during this turbulent time. My aim is to maintain exposure to the AI megatrend, which will mean preparing myself for the next bear market, with the objective is not to sell all my AI stocks and then attempt to buy back at the lowest price, as I'll only know how low the market will go with the benefit of hindsight. Make America great again. Bring back jobs. That is the Trump propaganda machine. But all Trump is doing is accelerating the AI megatrend with the trade war, which will result in less jobs for US workers. All the while, China will continue to develop the next generation of automated factories that produce goods at lower prices, which means China becoming more competitive, all while AI continues to displace the human workforce. Despite this, companies are being forced to move some of their production to the US in an attempt to beat the tariffs, which usually means circumventing the rules to avoid the tariff being applied. Though what work will be done in the US will be highly automated, thus not many jobs created as promised by Trump, only robots to increase productivity and lower costs. These are needed as there's a huge gap in the cost of production between China and the US, and it will take time and investment to build automated factories, and in the meantime there will be inflation and shortages. After the Trump tariffs, the next major stock market event will be the yen carry trade in the coming months, when Japan's increased inflation will prompt them to increase interest rates again. I mentioned in my March update that we were in for a volatile first few months of the Trump presidency, with multiple stock market shocks, which any one of these could send stocks sharply lower, and I've been proven right. What do I do during a time of maximum uncertainty? Trim investments at a profit. The stock market rally off its low of 4,800 has been a great time to trim the stocks I purchased during the drop as the opportunities presented. Later in the video I'll show you which stocks I have trimmed. I've been looking to increase my cash position ahead of the Trump bear market, which I expect to arrive between August and November 2025. I do believe that we are technically still in a bull market and the risks are to the upside until around August 2025. How high? I think 6,400 is achievable. However, I would like to see 6,000 and then 6,200 achieved first to have a complete confidence in this. After August, I expect a big drop during September-October, as the economy by then is expected to contract during the fourth quarter and the stock market discounts the future. It is essential to keep maintaining some exposure to AI stocks despite all the fear from the finance media companies. This is why I do not read or watch any financial media press or TV channels, as they always advise the incorrect strategy for the financial markets. Their primary focus is to sell fear and panic, so to maximize their own exposure and profits. The stock market has experienced panic events by Trump with his actions and comments, which has triggered a capital flight out of the US, sending the dollar, stocks and bonds lower, and risking a bond market panic. I'm not a financial advisor, and this is not financial advice. This is purely what I intend to do. I fear rising stock prices, but I'm brave with falling stock prices. If the news is bad, why does the stock market go up? It is because there are not enough sellers. Therefore, stocks are being bid higher, which is triggering short covering and retail buying. The rally is technical in nature. It can reverse just as fast. The market trades on many levels. There's momentum, trend, fundamental, news, events, and then there is the market dynamics of sellers, buyers, and market makers. To be on the right side of market dynamics, I trim when the stock price is going up and buy when the stock price is going down, as then the advantage is with me. It is important that I remember that investing involves three important elements: ensuring you have a list of great AI stocks, exposure to these stocks so that I can trim when they become expensive, have cash ready to enable me to buy when the market panics. Therefore, during this uncertain time, it is essential that I have enough cash ready for the market panics, whilst also retaining enough exposure to take advantage of any market rises. Next, I'll give a brief comment on why I have and continue to invest in the following AI stocks. After this, I'll show you my buying targets of all of these AI stocks and what my average price paid and my asset exposure. Before I intend to make any asset purchase, I determine firstly how much risk or exposure I wish to have. This aids my unique take on dollar cost averaging by having an investment price target for each AI stock I wish to accumulate into. To learn more about this, watch my video Wealth Building Dollar Cost Averaging. My investment portfolio stands at 55% invested with 45% left in cash, ready for any investment opportunities. My investment in Nvidia has gone from 80% back in January to 140%. I took full advantage to purchase this great AI stock at deep discounts from its all-time high. This is what investors need to take on board. Be positioned for either rising or falling prices. During the rally, I've been trimming down my exposure to 114%. I will look to trim more in the coming months. As I mentioned in my October-November update, I expect Nvidia to reach $240 by the end of 2025. Therefore, I'll be careful of over-trimming Nvidia, as this stock does not give many corrections to build a great position in. Nvidia has experienced a fantastic earnings growth since 2023. Its future EPS growth is looking great as well, which should mean the stock trading at $180 over the next few months, which would be a 10x increase when the share price was trading at just $16 during 2023. Early this year I said Google was on course to trade above $200, which it did. Since Trump's tariffs, it has dropped below $145, showing great support at $150, which means the downside should be limited, whilst the upside is that Google can reach $200 again. Thus, I increased my exposure to 96%, as the stock price is laying the groundwork for its next target of $240. During the rally, I am waiting for the stock to rise above $180 before any trimming. Google had great earnings beat earlier, which its stock prices looked even cheaper, especially against the other AI stocks, which should result in the share price climbing again above $200. During the correction, AMD dropped briefly below my buy target of $88, and I've been using my unique take on dollar cost averaging to build a bigger position, taking my exposure to 170%. During the rally, I've been trimming down my exposure to 139%. I'll look to trim more over the coming months. AMD's earnings haven't been great as the other AI stocks. However, I do believe this will start to change as we progress through 2025. AMD seems to be trying to find a floor to the share price drop. Once this is complete, I believe it will start to rise above $160, which will give me an opportunity to trim my exposure to below 100%. During this market weakness, I've been taking advantage of accumulating into Microsoft slowly, increasing my exposure to this steady-as-you-go stock. I expect it to rebound above $450, which it did, trading above $460. During the rally, I've been trimming down my exposure to 40%, and I'll look to trim more over the coming months. Earnings growth have been steady, and I believe this won't change for the future. Its cloud compute is bringing in strong revenue and earnings growth. Meta is another stock which has been hard to increase my exposure into. As an AI stock, it is expensive. During this correction, I've been lucky enough to increase my exposure by purchasing stock for under $500. During the rally, I've been trimming down my exposure to 30%. I will look to trim more over the coming months. Since November 2022, Meta has had a spectacular bull run and refuses to drop despite being overextended. The reason for this can be seen in its high earnings growth. It consistently tends to be earning estimates, as Meta, like Nvidia, is AI. I like Taiwan Semiconductor Manufacturing, as they'll soon be updating on the next AI chips, which will mean no slowdown in demand, as data centers continue to consume compute power, where Taiwan Semiconductor Manufacturing cannot produce enough high-end chips to meet demand. The stock did drop below my buy target, which I could not resist but to purchase some more, increasing my exposure to 64%. During my May update, I said the downside looked limited and I believed the stock would rise towards $190, allowing me to trim, in which it has done and has allowed me to reduce my exposure to 45%. AI computer chip demand is still strong and accelerating, so exposure to semiconductor companies like this is key to my investment strategy. This company has excellent revenue and earnings, which are growing at the rate of 20% per year, which should last the next 5 years. I believe it will give an earnings beat, which should allow the stock price to increase. I've been repurchasing Qualcomm stock during this market correction as the stock dropped towards my buy target of $152. This stock is beginning to look cheap against the other AI stocks, and I will look to trim as it rebounds towards $170. It is looking fair price now, and its earnings growth is great, suggesting any correction in this stock will be temporary. I'm using any dip below $152 as an opportunity to accumulate more. ASML stock price has recovered since the April drop, though its price to earnings remains fair valued, so not dirt cheap but neither expensive as it was when it was trading above $1,000. Its earnings growth looks strong, so I expect it to trade towards $800, which I'll look to trim at. I expected ASML to have great earnings, which it has done. It has helped the stock recover higher, above $750, and still looks on course to head above $800 during 2025. Micron stock is volatile, which was demonstrated when it dropped to $65 during this correction. Volatility like this I look to capitalize on. Since then it has surged towards $100, which I've been trimming my exposure down to 97%. Micron's earnings have been affected by the AI chip demand, therefore the stock price should move higher, maybe not above $150 anytime soon, though the earnings growth does look good for 2025, which should mean the stock rising above $110. This table shows my buy target for each AI stock, what my current average purchase price has been for the stock, and what my current exposure is of the asset. It is a balancing act between having exposure and overpaying for an AI stock. The easiest thing to do would be just to invest and forget. I can't do that for stocks such as AMD. It's too volatile not to try and capitalize on this, which is why I buy in and out of AMD depending on what the stock price does, whilst building a core position, as I believe, regardless of what stock prices do, the AI megatrend is going to run for decades. While Bitcoin was going down, the price of gold was going up, demonstrating that Bitcoin is no digital gold. It is simply a risky asset and not to be used as a safe haven. It's worth remembering that fact. In my May update, I believed that we'll get another Bitcoin high during May, which we did as Bitcoin surged to over $110,000, which I've trimmed my exposure to. As I believe cryptocurrency is nothing more than a gamble, thus I'll take any opportunity to reduce my exposure. This has enabled me to be more focused as I've banked some of the profits, and if Bitcoin moves towards $150,000 or $200,000, I still have some Bitcoin that I bought back at the end of 2023 for an average price of $37,000. With the Bitcoin bull market coming into its final year, I'm already preparing myself for the next cryptocurrency bear market. This strategy is still in progress, but I plan to begin small purchases at 40% below the all-time high, accumulating more as it drops, as the bear market is likely to last a year. At this moment, I'm not 100% sure if Bitcoin will drop 80% of its high due to ETF Bitcoin funds. It is more likely to drop by a maximum amount of 50%. And lastly, do not forget we're still in a bull market, which means when AI stocks fall, it's time to get greedy, not fearful. Thank you for watching. If you found this video helpful, don't forget to like, subscribe and hit the notification bell for no more tips on how I use AI stocks and cryptocurrency to build my wealth and beat inflation. Until next time, take care.